Good afternoon. We at the GFSC want the bailiwick to flourish, and we recognise in order for this to happen, we need to hold the cultural mirror up at ourselves. Innovative businesses need regulators who are open and supportive and there to listen. This is an ongoing commitment from the GFSC. You may remember the chairman's rallying cry that innovative businesses should come to the regulator with a coffee rather than their lawyer. We continue to embed this commitment by launching the Innovation Soundbox. The Innovation Soundbox is a deliberate play on words. We're conscious that other regulators have launched Innovation Sandboxes and Innovation Hub. But in Guernsey, the joy of it being here is that we're small, we're easily accessible. You can walk down the road and meet us. We're not faceless regulators. But whilst we're small, we also punch above our weight in terms of the rounded services we're able to provide to innovative businesses. The Innovation Soundbox provides you and innovative businesses with direct access to regulators and policymakers at the Commission. The Soundbox provides you and innovative businesses with direct access to the regulator, both policymakers and supervisors. It seeks to give a steer on what the application process might be for an innovative business. We're here to be transparent about what the regulatory requirements and expectations may be. We also will be able to provide an explanation of our authorisations process, but ultimately the theme that you should get from the Innovation Soundbox is that we're here, open and listening. At the moment, we've been observing exciting growth in the area of distributed technology, the blockchain, although not all of these businesses necessarily require financial services regulation. So may I take this opportunity as a shameless plug. If you're sitting there having a bright idea, an innovative idea, come along, even if it's in an early stage, to the Commission, to the Innovation Soundbox. We'd like to discuss it further with you, and the kettle's on. Another example of our open door approach is our use of online consultation tools. We've used them both for the Revision of Laws project and for the Lending, Credit and Finance project. We find that Citizen Space, which is the tool we use, has increased both the quantity and quality of engagement and responses to our discussion papers, and crucially from a business perspective it saves you time, they're easier to complete. Of course, we've promoted the use of these online consultations through the GFSC's Twitter account, which I hope some of you are signed up for. As you may be aware, the Commission has heavily invested in its online submissions capability over the past few years, first through online PQs and more recently through online submission forms. This is something that's going to require continuing nurturing and investment from the Commission. I'm personally interested in the global debate about the future of regulatory capabilities in this area. So, for example, there's some speculation regulators of the future could have direct live access into licensees' databases. We'll have to see whether that takes us. But being innovative isn't all to do with IT and technology. You may be aware we've placed a regulator as opposed to simply a promotional body in Hong Kong. We consider that this was an innovative move for a regulator, and we think it reinforces our openness and our willingness to listen to new business directly. I'm now going to hand over to Emma, Jeremy and Fiona, who are going to continue with the theme of innovation at the Commission.
I'm now hoping there's going to be some more slides. Indeed, there we go. Great. Having heard Gillian's comments, I think you'll agree, I'm sure, that in order to innovate, we actually need to communicate. And that really does sound, as I say it, like a convenient throwaway strapline. But it has been particularly true of the innovation that's taken place in the investment sector in Guernsey. And what this slide demonstrates is the product that we launched earlier in the year, the manager-led product, which is aimed at the alternative investment fund managers seeking to market an alternative investment fund into a European Union host country under what they describe as their national private placement regimes. Now, for those of you who might be less familiar with this regime, It simply means the regulatory approval process that any Guernsey fund must go through before it's able to be marketed to residents of European countries. And each member state in the European Union is able to, and believe me, generally does, apply its own levels of regulatory requirements at each of those steps. The manager-led product, or MLP, was designed to ensure a proportionate risk-based level of regulation is applied at the manager level. And hopefully that answers one of the questioner's earlier questions around duplication and whether regulation would actually pull back at all. As I say, we hope that it avoids duplication of regulatory requirements over several entities within the overall structure. My colleague Mark LePage will be speaking on this in more detail tomorrow at our investment presentation, and he will indeed also be explaining how he managed to create a product using his own initials. However, from amongst the key features listed here, the main point I wanted to emphasise today is that cooperation between the Commission and the industry that led to the introduction of this product. And in my opinion and experience at the Commission, it was introduced in the shortest periods of time that I am aware of for any new product, from conception to launch in approximately 3.5 months. The other new product developed this year in the investment world, so new in fact that it's only just recently gone through consultation and will indeed be formally launched tomorrow, is the Private Investment Fund. This product came about as a result of real communication between the Commission and industry. Following the introduction of the manager-led product, we were approached by industry representatives who I think hoped that they would find us in listening mode. And it may actually have been a purposeful tactic of theirs to approach Mark first and leave it to him to sell the proposal to me, as being a gap in the Guernsey suite of products. Indeed, we were in listening mode, and I would say so were the industry, as the main win for me was to hear that they wanted this private investment fund to be regulated and not unregulated as one might find in other jurisdictions with similar products. As many of you will not be present tomorrow, please allow me to indulge in a soft launch for this product today. So to pick out a couple of the key features listed here, the private investment fund can now have up to 50 legal or natural persons in it holding an ultimate economic interest, giving it more flexibility than perhaps a restriction of, say, around 15. Furthermore, there is no limit as to how many people it may be marketed to. Again, we feel allowing more flexibility. We believe this product will fill a gap in our existing suite of funds and will, we hope, offer opportunities across all sectors, with it perhaps being attractive to clients of fiduciaries, family offices and the like, as well as to the fund market. In the same vein as the manager-led product, there will be warranties attached to the applications, and where signed, we will endeavour to process those parts of the application in one business day. Clearly, we place a great deal of weight and importance on the warranties, and industry, when signing them, as with any of the current warranties on any of the other application regimes in place at the moment, should do similarly. Both of the products I have mentioned today form part of the vision for the suite of investment products Guernsey offers. If you imagine a spectrum, we have at one end the consideration of products that fall outside of regulation, moving to private investment fund, and to the manager-led product and other authorised products at the other end of that spectrum. The vision is, as it sounds, still a work in progress, and it will require further work, including on aspects of it like the treatment of single asset vehicles and additional work on the MLP Mark II. Sorry, there's seriously no pun intended there, and I think we need to rename that, probably to Phase 2. Phase 2 of the manager-led product will indeed look to produce a similar product for the rest of the world, looking away from the European Union. In this work, continued communication between ourselves and industry will be vital. Our ultimate aim is to achieve a suite of products that is simple, flexible, and comprehensive. Well, that's everything in the investment world for now, so I'll hand you over to Jeremy.
Thank you very much, Emma. My name is Jeremy Quick, and I'm going to talk about banking and insurance for 5 minutes. So I've taken a fairly open view of innovation as basically being anything new that affects Guernsey. And looking on the banking side, there's been an enormous amount of new stuff since the global financial crisis. And I'd say two things about that. One is that it is impacting the banking sector here very significantly. But on the other hand, as I'll talk about later tomorrow, we are not just taking all this stuff, we are adapting it and changing it so that it is relevant for Guernsey, particularly, for example, around liquidity. The other big change that is coming is shadow banking. Now, I don't think that really affects us too much on the wholesale side, but on the retail side, it does, particularly peer-to-peer, which I'm sure you've all heard about. That is something that I know Gillian, in her innovation box, has been looking at closely. The last big thing, I think, in banking that is coming is lending, and whether or not we should regulate lending. And there is, in fact, a paper out to the community already on that precise subject. And I think that one will run for a while next year. So moving on a bit, insurance intermediaries, I'm sure you've all come across robo-advice and what that means. I think personally that's coming to this jurisdiction, and it's coming fast. We will need, as regulators, to adapt and to think about that in cooperation with the local insurance intermediary industry here. That actually is something that is happening in real time now at the Commission, and we will talk to the industry in due course about that. Insurance has always been an innovative area for Guernsey, and many of you will know that we claim to have correctly invented the protected cell company a long time ago. I don't think that innovation has stopped, and it really is quite remarkable given that it is quite a small industry. First of all, at the Commission, we have had a challenge thrown at us by the international regulators to invent our own risk-based solvency. Now, one option would simply have been to adopt Solvency II, but we haven't done that, so we've had to basically make a bespoke risk-based solvency approach here, which we, thanks to the support of the industry, have been able to do, and that's embedded, it's working well, and it's a huge tick, I think, on our regulatory score sheet. I mentioned protected cell companies. I founded 25 years ago, and a lot of people think that was it. I can tell you, over the last 2 years, we've still been innovating them. I won't go into the details, but when we were looking at insurance company for construction companies in the United Kingdom, connected with George Osborne's attempt to increase mortgage exposure, at the micro level, we did develop the concept of multi-owned mutual cells at the bottom for building companies that were not big enough to take a cell for themselves. Not very well reported, but I think it does illustrate something about innovation and about this jurisdiction. Innovation is not necessarily the creation of some sudden inspirational revelation. It can be evolutionary and very gradual, and I think we're in a good place for that. Another example of that is our insurance-linked securities paper that is currently out with the industry. We think that alternative insurance is an area where growth is possible, and again with the industry, and I'll talk about this tomorrow, we have developed our regulatory approach and pushed it a bit further in order to accommodate this prospect. And finally, several of you will know about longevity in incorporated cell companies, particularly the British Telecom deal, which was billions. I wouldn't say that's totally new, but I think, and I wouldn't also say it's been a push by the regulator. I have here pay total homage really to the insurance industry and the lawyers on the island for developing these important longevity deals. And finally, I'd just like to mention pensions. This is not something we regulate at the moment, but there is again a paper out that Andy Sloan has developed on defined contribution pensions, and that is something where again we will have to think about new things, how it fits into the RATs and so on. This is a very Guernsey area, but it is something that we are very keen to get right and, if necessary, innovate on. So I'll pass on to Fiona at that point and do that. Thank you for listening.
Thank you, Jeremy, and good afternoon. As I bring to a close this session on the Commission's approach to innovation, I suspect that as the Director of the Financial Crime Division, I'm seen as something of the villain of this piece. Anti-money laundering and countering terrorist financing controls and the AML-CFT handbook are hardly synonymous with fostering innovation. I don't doubt that within many of the organisations represented here today, it has been said on more than one occasion, well, the handbook won't let you do that. Now, I'd like to try to dispel that perception. Innovation may not be in the Financial Crime Division's title, and we cannot offer a new product for Guernsey's shop window, like the Private Investment Fund or the manager-led product, but rather like Fiduciary's Innovation Sandbox and the Banking and Insurance Division's development of new rules to encourage the insurance-linked securities market, we too have been playing our part in establishing a better regulatory environment within which good types of innovation may flourish. When the Director General joined the Commission in 2013, he kept hearing that the handbook did not facilitate the use of technology in firms' processes for taking on clients. This went on to become one of the key drivers for revising the handbooks, alongside the need to bring Guernsey's AML-CFT regime up to the Financial Action Task Force current standards. Now, the project to revise the handbook has been ongoing for some time, not least because of the wish to take on board recommendations which came out of the 2014 Moneyval evaluation, the good results of which were published at the start of this year, but which took a little bit longer than we expected. However, we used that delay to take forward the publication of an annex to the handbooks on the use of electronic due diligence in the processes firms have to take to identify and verify their clients. The issue of the annex broke new ground, as no other supervisor at that time had set out its expectations on the take-up and use of technology in the AML-CFT framework. Technology such as digital signatures, electronic certification, and electronic verification. In practical, non-tech terms, it meant that firms wanting to invest in some of the smartphone and tablet apps on the market or develop their own electronic arrangements to onboard clients could now do so, knowing what safeguards and steps the regulator expected them to take. And I appreciate that we didn't get it all quite right, but where we got it wrong, we listened and we promptly acted to correct it. And now, 6 months on, we're beginning to hear of the benefits this annex has had. Firms are telling us that they're starting to use digital signatures within new online systems. And it's been particularly encouraging that some of these developments have a local origin. So it seems even the handbook's image can be changed. Now, the wider project to update the handbook remains ongoing, as it involves changes to the regulations, which are the responsibility of government, and as those regulations form the foundations of the rules and guidance that we issue in the handbook, we have been working closely with policy and resources and the law officers on the revisions which need to be made. Now, you can expect to be consulted by both policy and resources and the Commission on those changes to the regulations, the rules and the guidance in Q1 next year. Now, I must caution that we have to work within the constraints of the international standards set by the FATF and what those standards require of AML-CFT regimes for international finance centres like Guernsey with their predominantly off-island client base. But what we do want to do is not only issue a user-friendly handbook, but also provide firms with the clarity they need for the sensible development of new ideas. So in conclusion, whilst we cannot change international standards, as you've heard from Gillian, Emma, Jeremy and myself, the Commission is fully committed to listening to you and ensuring that the good start made on creating the right environment for innovative ideas, including fintech, continues. Thank you, ladies and gentlemen.